Hello, welcome back to Global Weltrade Synthetic Signal Provider Service YouTube channel. If this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to like and refer the channel to your network so that YouTube will push us to a higher level of audience. Okay. Um, it's been a long time I uploaded content that are long videos simply because I'm waiting for the right idea to create. And today we have this topic, and the video is going to be at least 10 minutes. So it's gonna be a long video. The topic is assumption issues in FS synthetic trading. If you can be able to keep journals of your progress as a trader, you discover that what actually makes you to fall among the 95% losers or even 99% losers in the forex market is actually assumption. What is assumption? Assumption is trying to be a market mover when in reality you cannot move the market. Market has to be moved naturally and you have to feel it and see it. So here assumption has to do with when your feeling is compromised. What you feel is actually different from what successful trader feels. So when there is feeling differential in such a way that the direction of your feeling is different from the direction of the feeling of 1% successful trader, you lose in rows, you lose forever. Because there is no point. Even if you lose $1, you still lose $1,000,000 because it's 100%. Your equity is $1 and you lost it. The same way you lost it when you actually trade a $1,000,000 account. You want to risk all on a wrong trade, you're definitely going to lose it. If you risk all on the right trade, you're gonna win. So we're talking about success and failure. We're talking about truth and false. In logic, there are two major variables: truth and false. Something can either be true or false or in between. So I don't want to talk much. Let me read out some of the things you need to know. Assumption is when you hope for market to do something for you, even when you know it fails multiple times in the past. You really know that whenever markets come to support or resistance, it has high probability to break it. But once it comes there, you just enter the market. No confirmation, no candlestick pattern that confirm that this thing is going to work. No liquidity sweep. You just enter the market and you keep doing the same, thinking that one day is going to favor you. That is assumption. Next meaning of assumption is also trying to reverse the market when it is actually continuous. When it actually continuous. Okay? Continue continuous. Okay? And vice versa. Okay. Assumption is fighting your instinct when you know that it is the truth. Your mind, your metaphysical subconscious level is telling you that this thing is not going to work because your mind understands the truth than your confusion or your misunderstanding. It will whisper to you in your ear that this market is not going to work. Then you say no. Or it will also whisper to you that this market is going to work, but you say no. It will always be in the direction of you to miss that trade or to lose that trade. So those things are assumption. Assumption is believing in wrong trades just because of pressure, impatience, and frustration. Maybe you make profits for a while and you spend the money. You trade You make, like, maybe in a year you make some good profit and you have some good lifestyle. Then in the next 2 years, things started changing and you couldn't have good profit and you couldn't live the lifestyle you wanted to live. And then maybe in the third year, you feel like you wanna repeat the same process, that maybe this method or strategy you are using is going to work one day. That is assumption. You are assuming that it's going to work. You keep violating those rules. You keep going against what you know that this is the truth. You know that this is the truth, but you keep going against it. On that third day, you are going to lose more money. And so you are going to be faced with frustration. You are going to be faced with pressure. You are going to be faced with impatience. Instead of money to pursue you, you will be the one uh, running after money. When you are running after money, the money will increase speed and run away from you. But when you create a system, when you have that energy and spirit for money to run out, like for money to follow you, then you see that money will follow you so easily. If at all you lose, you just have a high win rate of 80%. That means you lose 20% of the time and you win 80% of the time. That is success. Or you win 90% of the time and you just lose 10% of the time. That is success, okay? Okay. So another meaning of another thing you need to do here is assumption is not good. It's an enemy of progress. It leads you to more losses. So what do we do? Kill assumption, accept the facts, and be bold to accept the truth. No matter how frustrated you are, no matter the number of years you have lose, a single year you decide to remove assumption, a single year you decide to change your behavior for the best, a single year you decide to improve your femininity or masculinity and face life squarely, that you really need to make this money to live certain lifestyle. You don't want to live an assumption, you don't want to live messy. You want to face life squarely. You need Ferrari, you need Bugatti, you need big house, you need better family, you need the right wife. You want to uh, be financially free and face other part of life, because when you are not free financially, you talk about money all the day, but if you are free financially, you talk about other important things more important than money, of which you use money to settle some of them, most of them. But if you don't have that money, you talk about money all the time, as simple as that. So you need to kill assumption because it's enemy of progress. So I'm going to go to chart to show you how assumption have destroyed a lot of traders. Okay. You see, this is split S5 index in the Weltrade market. It is one of the split S assets. It's very volatile, okay? Now, there are general rules in the market, but those rules can be false at certain point and can be true at the other point, depending on your experience as a trader. Now, everyone know that there is a break of structure here, right? That's key. Everyone know that the market is downtrend somewhere here. Now, if you go to um, 4 hour time frame, you will notice that this is a resistance level. So some people will assume that when price reach here, it's going to change direction. That is assumption. It doesn't work that way. By theory, a market that is in a given direction tends to remain in that direction. It has 100% probability. It has higher probability to remain in that direction. So if it is buying, it will buy more than it will sell. That's the truth. And when you deploy different theory, you discover that the market is periodic. it will go up for a given, it will go down for a given period and go up for a given period. Like it doesn't do the same thing at the same time. But even when it is ranging, it will sell for a period and buy for a period. So this based on difference theory. If you know about difference analysis, different situation, differential equation, you know that things happen using different levels, using difference of interval. So from here to here is sold. Then from here to push up, it will buy. As simple as that. If you check again, from here to here, it bought in the time interval. What I mean is this. From this time, July 26, 26 to July 26, like July 26, 8 a.m., it bought to July 26, 8 p.m. And then from July 26, 8 p.m., it sold till July, uh, I'm sorry, this is, that was 2026. Let's start afresh. From July 12, 12 noon, 12 noon, it bought to July 13, 8 p.m. And then from that time, it sold till July 15, 12 noon. You see, so it doesn't just buy and sell at the same time. Like it creates a footprint, a real footprint within a given interval of time. And there are two footprints: buy footprint and sell footprint. Though a buy market can have some sell, but they are going to be small, small. And the selling market can have some buy, they are going to be small, small. So overall, if you do the summation, when the market is buying with small, small sales, if you look at it at higher time frame, you just buy. And when the market is selling with small, small buys, if you look at it at higher time frame, it's just sold. As simple as that. You really want to make that profit, and so you have to avoid assumption. So let's uh, go to other assets and check where assumption key people. This is a FSBO 99 index, and right here you can let's go extend the time frame, daily time frame. Let's go to daily time frame. You know that this is a low. It's a low, okay? And so the belief is once this low is significantly broken, like a candle open and close below it, like this candle open and close below it, that like a bearish candle open and close below here, this is a sign of strength. So this confirmed breakout. So on a pullback, we believe that the market is going to sell, okay? Then that what happened, it sold, and then it react again and then sold, okay? Because the energy of the sellers are still there. But some traders fail to notice that this market is losing selling power, because this is a high and this is also a high. But this high is higher than this one. So I'm sorry, this is a low and this is also a low. But this low is higher than this one. So it is now making higher lows. With that, a higher low will create a higher high. When this market is coming here, you remove assumption. You are not going to still believe it's going to sell. No, you have to kill assumption and then do what? Believe what this higher low is telling you that it is going to. So the fact is going to create a higher high, even if it failed to happen. That is fact, because every higher low will create a higher high, and every uh, lower low will create a lower high. Okay, but I'm going to talk about lows later. Like lowers later. I'm talking about highers right now. So with this belief, what do? You find a way to look for buy, and at that spot you remove the resistance, because the resistance is no longer going to hold. Automatically support will take over, so we remove it, and then we go to some lower time frame. What are we looking for? We are boldly like a lion buying this market. Some people will even put sell. Amateur traders who have not seen a lot. Like somebody like us will not do that, because we are we have experienced a lot of things in this market that we know the truth each time we see the market. Even at this juncture, we don't actually do analysis. When we look at the chart, then we trade based on the feeling. And the feeling, but don't be so carried away. Like we actually, this is theory, this is celebrity video, this is just content. We actually do analysis. The truth, any day you feel proud, any day you feel like you have arrived, you lose more, and that is when you risk big. Sometimes you can risk 70% with hope that you are expert, you lose all. So we do analysis actually, but inside the analysis, our feeling matters a lot of as well. If I feel that this market is going to buy, it's going to be more reasonable than the analysis I did, because the feeling comes from experience. Okay, so some people will put sell here, hoping, oh, because there was a sell here, so after some range and pullback, it's gonna break this level and sell more. No, 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 no. I've done the analysis. I've understand where the market is heading to based on highs and lows. Okay, now let's continue. Let's check another market, or let's continue on this asset and go back in the past. Okay, let's go back in the past. Okay, let's be on daily time frame as well. Okay, now there's something we need to know. There's something we need to know. You see that in the daily time frame, there was a high here. Okay, that is fact. There was a high there, and there is also an order flow. That is a liquidity sweep. The market go against that high and pull back to tap into another high within its vicinity here, and then go up. Now today at this spot, there was a sell that brought price from a big high, from last high, like from a higher high or from a supply zone to here. What do you expect? The fact is that I don't even want to wait for market to come here and react. The fact is that once this market reach here, because this place is now a strong demand zone by experience, is also a demand zone. So one market tap here, it will go straight up. So as market is approaching here, I will look for change of trend to enter. And I'm not going to be afraid of what is going to happen here. Because what many traders do is that they will have to assume that when price have to come here and go down to create double bottom. That is the assumption. Because the fact is that the sellers have reached liquidity zone. So if you reach liquidity zone, you can't just do any other thing. The market loses energy, and it loses energy in the current direction and increases energy in reverse direction. So the reverse direction will go. So why are you going to waste it? Look at what I mean. Let's go to 4-hour time frame and see what I mean. In the 4-hour time frame, I just need to look for change of trend. So example of change of trend is this volume. That is volume rise. Change of trend is not just trend line formation, just volume analysis. The kind of candle that print out, this candle shows volume, shows that this market is ready to buy. That is fact. That is not assumption. Some people will be like, oh, if you reach here, let it, that is, you are amateur, you don't know what you're doing. So if you reach here, let it pull back and then I'll enter. No, no, no. It's going up right here. This is a correction, right? This candle close bearish. That is advantage. If in football, some people will have fouls and the referee will do advantage, meaning that the referee will give advantage to the opponent team, meaning that the opponent is not going to be penalized with that foul. So when this bearish candle here is an opportunity, you should have entered at the close of this of this bullish candle, but this bearish candle forming is an opportunity. If you see it, you enter and you hold this trade. You ride this trade forever. You see, when you reach the major resistance, you just react and then create higher buys, create more buys. I'll be ending this video. Make sure you're proactive, go for our courses and mentorship, subscribe to our VIP signal service, and be rich. Thank you and bye for now.